Aloha, everyone. All right, we're starting to see some major divergence between the lead caps, the big caps, the NASDAQ 100 semiconductor related stocks versus the rest of the market. This isn't a problem as long as we stick with the leaders. It's fine. It can last longer than the shorts can stay solvent. But I'm not going to lie, I'm starting to get a little concerned about it. When you look at the QQQ, you can just look at this relative strength line and you can just see since March of 2023 the direction that it's going, lower left to upper right. Beautiful. SMH, even more beautiful. I mean, that is gorgeous. And it's paying off for us because, as anybody that's a member of Big Wave Trading knows, my number one stock since 2020 has been AVGO. It's our biggest position in the long term portfolio, followed by NVIDIA, which is the new number one since back here, and since becoming number one is up 240%. Now, unfortunately, for the long-term portfolio, where I love to load up positions, is on dips below uptrending 200 simple moving averages, reclaims. Since becoming number one, has NVIDIA ever done that? No. But we've been buying it. We were buying it in 2022. We were buying it in 2023. We have it in the long term. We have it in the current quarterly portfolio. It's also swing and a position trade. So everything is going well, just like with AVGO. Look at that relative strength line. This has been my number one. It's currently number two. When we stick with leaders, great things happen. But on a swing side, it's been very choppy. It hasn't been smooth. I basically get long and immediately get out of way more stocks. And it seems like that I get long that work in my favor. So right now, it's all about the big cap, mega caps. We'll go back to that QQQ chart. Everything is fine here. SMH chart. Everything is fine here. I mean, with relative strengths like that, it's quite obvious where we want to stick for in the where we want to stick to in the market. My problem is listen. I love long-term stuff. I love it. It's going great. Everything's wonderful. But I do like trading nice, beautiful chart setups that I can then in a short amount of time put a lot of capital into, knowing 70 to 80% of the time I'm going to be right and I'm going to make a lot whenever I'm right. It just isn't happening that way. And it usually doesn't happen for me as long as the IWM is not leading. The IWM, if you look at this weekly chart, since 2020 has only led one time, those 2020 lows to the 2021 highs when it was breaking out above the highs here. I don't know if anybody was noticing, but the relative strength line was telling you how much stronger the spine QQQ was. And you can see since then, this thing has not led at all since those 2021 highs. So this has been the wrong area of the market to focus on, which is why we're focused on semiconductors, big cap, mega cap stocks, not IWM. Now, for my technical setups that really work well, we want to see this index leading. Like in 2016, can I even go further? Not even that much in 2013, but I want you to look at the IBD 50 in 2016-17. IBD 50 was leading. 2020-21, it was kind of leading, but now look at it. Kind of looks just like the IWM. So with the IWM looking like this, especially that relative strength line, with the QQEW, equal weighted NASDAQ 100, look at that. And with the RSP, look at that looking like it does. And even if you want to look at ARC, look at that at the lows. Beautiful chart patterns. Momentum really isn't on the side of swing traders outside of big cap, mega caps. So that's going to continue to be my area of focus until I can see ARC leading, IBD 50 leading, QQEW, RSP looking better, and more importantly, the IWM and IWO leading. Until I see these names leading, it isn't going to necessarily be the technical setups that I'm interested in. It's going to be the mere fact that something is strong that's big cap, mega cap, specifically big cap, mega cap, NASDAQ 100, semiconductor related. So on that note, this evening, I have a few long ideas. The first one is a mega cap, Netflix. This is a long-term portfolio stock We added to it throughout 2022 on the way down. It is now breaking out. I would like this to go from a swing position to a position trade, but it's not semiconductor, so expectations are muted. It also doesn't currently have 25% sales growth. That's been huge for me lately with what's been working, what isn't. I've noticed those that have sales growth over 25% have composite ratings over 90 and have beat on the top and bottom line in the most recent earnings report have been doing the best. Netflix doesn't qualify with the 25% sales growth, but it is a 99 composite rating, 99 EPS rating stock. They did beat on the top and bottom line in the most recent earnings. So but I got to size accordingly. I can't go balls to the walls long in this one individual name. If it was semiconductor, sure, we'll give it a shot. And if it doesn't move higher immediately on day one, we'll just start getting out of it. I like to get out of 50% to 75% immediately if a stock doesn't work immediately in this tape, because a rising tide is only lifting the QQQ and SMH boats right now. The XLC is not a leader. So that's where Netflix comes from. My game plan on this swing is to get long above the high of the day, 275.59. I'll be calculating my size. Since I don't have any pocket pivot point signals on the way up, to be honest with you guys, technically the low of this base is back here. But if I use this low, I won't get any real size. So I'll use this low. And what I will do is if it doesn't move higher immediately, I'm out of 75% of this play. So I'm going to calculate my size and risk to here. So this will be my final stop level, and where I'm going to calculate the exact dollar amount that I'm okay 100% risking and losing in this trade in case it triggers, fills, and then somehow fails immediately in one day. Can it happen? Yeah. Probability's low? Absolutely. But it can happen. And in this tape, since it's not semiconductor, I'm going to err to the side of caution. So Netflix is the first idea. So Netflix, we went over these indices. NVIDIA showed you. The next one we'll go over, we'll skip this one. We'll save that one for last. UHS. UHS, already have a position in this on the swing side. Want to add to it with today's hammer candle. Heavier volume than the day before. Still has that green bop. Want to get long on the add signal above today's high day. I'll be calculating my size and risking to this low. It's kind of splitting hairs to this low of the current consolidation pattern. So I'll use this low since there's a pocket pivot point signal there. Could even use this level if you're really worried about it triggering, filling, and failing, which it could. It's not tech. It's not semiconductor, but it is a big cap. It is an earnings winner on the top and bottom line. And UHS has a 97 composite rating, only an 82 EPS rating, still good enough. So I'm going to get long above the high of the day, calculate my size, probably from this low, stopping out at that low. Then I'm going to go ahead and take a little bit of a cheater entry on Spotify. Spotify is also like Netflix. It's another big cap stock. They beat on the top and bottom line also. Every single new long position beat on the top and bottom line this weekend. So it has that going for it. Spotify, though, I believe has only an 88 composite rating, so it doesn't have a 90 composite rating. So that loses a little bit of, I guess you could say, size with me because it doesn't have an 88 composite. And it also doesn't have sales growth of 25%. Neither does Netflix, neither does UHS. So that's all a negative for me since they don't have that 25% sales growth in the most recent quarter. That being said, big caps and mega caps, it's very hard to do. So whenever you do see it, it's really good. Spotify is right at its 50, right at its 21 EMA. I want to get long above the high of the day, but I got to calculate my size and risk to this low. You could use the most recent levels here and here, but I want to give it some room to possibly shake me out before it works because things just haven't been smooth lately. And once again, it doesn't have everything. It needs a 90 composite, doesn't have it. Needs 25% sales growth, doesn't have it. Hey, at least they beat on the top and bottom line. Sales growth, I believe, is 22%, so it is close enough. And I've got some good reward risk ratios, but the odds of it triggering, filling, and reversing is high. So once again, doesn't move higher immediately. I'm immediately, not even thinking about it, out 50, 75%. But what if it shakes you out? and then goes higher without ever triggering that final stop, so be it. Don't care. There'll be more signals every day. There seems to be an ungodly amount of signals. And the last one this evening, RBA. RBA is a big cap industrial stock. This one has a 93 composite rating and a 98 EPS rating. They also beat on the top and bottom line in the most recent earnings quarter. And in the most recent quarter, earnings growth was a whopping 107%. Now you know why it had this day. So, the day after the earnings day, or whatever, I think the earnings was actually on this day. I forgot what this day was, but this was the earnings day. Held, did whatever it did. Maybe this was the earnings day. I can't remember. Either way, all I know, 93 composite rating, 98 EPS rating, sales growth 107%, beat on the top and bottom line. After this day, I got an inside hammer, candle, strong volume, increasing BOP, so I went long. Since then, isn't doing much, but today is an add signal. I want to add to this position over 80 at 80.01. I'll be calculating my size and risking to this low on this one. Now, if this one didn't have 100% sales growth, let's say it was only 10%, this is what I would be doing. I'd be calculating my size from this low and risking to this low. But because everything lines up with this one, it's going to be here and here. Now, do I expect it to work? Not really. Why? It's not a QQQ stock. And is it semiconductor? So my expectations are aligned accordingly. Have a great weekend, everyone. We'll see you back here on Monday for members, next Friday for everyone else.